Hi, I'm going to go through the stock market example using the direct method. You'll be doing this on your project. You have to do both the direct method and the indirect method, and it only affects the operating activities. Here, I've already had the investing and financing filled in. It's the same whether I use this direct method or the other option companies have is to use the indirect. The direct versus indirect only affects the operating activities section. These will be exactly the same for both. And we prepare them as we have been since the beginning of the course. Now, I'm going to do a series of videos. I'm going to first help you with how do you determine cash collected from customers. Again, the company always starts with your income statement, then looks to the balance sheet for the related current asset or current liability account to see what direction it went in. Did it increase or decrease? Is it a source or a use of cash? And then get our cash on our statement of cash flows related to that income statement line item. Well, cash collected is related to revenue. So I'm going to go and get my sales. So I'm going to pick that up to get my cash collected from customers. So just bear with me here. Now, what we're going to do, though, is we're going to subtract from this, or in this case, I have to add it. I'm also going to add my negative allowance, doubtful accounts expense, because I am going to look at my good sales, if you will. So you net your sales and your doubtful accounts expense when you have a real company with receivables net of allowance for doubtful accounts. So one more time, we're going to take our sales and our doubtful accounts expense. If you can look at it this way, we're trying to get our sales that are good sales and get it to be the amount of cash collected from customers. So that's why I'm subtracting these, and I'm also going to then compare it to the balance sheet. So that would be the answer if there was no related balance sheet account, but there is. There is my accounts receivable net. I didn't mean to have that there, but anyways, here's the difference. The difference is you take your beginning minus your ending. Signage in this isn't going to mean anything. It's whether it's a source or a use to know whether you need to add or subtract, or how you adjust your income statement amount to get to the cash related amount. So here we have a decrease in net receivables. That's the amount of receivables we actually think we're going to collect. Those are netted. That's why I netted the sales and the doubtful accounts expense. When you have a decrease in receivables, that's a source. I not only collected all of my revenues from the period, I collected even more, meaning I have reduced my receivables. So how do I get to cash collected from customers? Well, since it's a source of cash, it means this is going to go up, but because this is already a negative, I'm going to do the double negative here. So it's really important when you're doing your statement of cash flows in the direct method in your project that you're not going to your journal entries and picking up the cash collected from customers. That will give you a wrong amount. So make sure you follow along doing it the way a company would do it in real life. Once again, you take your income statement item, try to get it to cash collected or cash paid. In this case, cash collected. We have to go to the balance sheet and look at the related current asset or current liability, see what happened to it, and then adjust our income statement line item to get it to be the cash collected. So that's the amount of cash collected from customers. I'll do the other ones in other videos, the other lines.